Good evening, folks. Today is Friday, June 10th, 2022. The time is now 5:44 or 5:45 p.m. This is my weekend market review. What's in front of you right now is a look at the VIX. So if you guys been following me the past couple of weeks, I made a notation here that the VIX was that this shaded area was a highlighted area of a level of support for the VIX. Dip below it just a little bit, but look what happened. Got that bounce finally, and now the VIX is on its way back to the upside. This is daily chart of the VIX. Now we're right back at the 50-day moving average. I do believe that the VIX will continue to go higher over the next week or two. So we have to see how that pans out. My ultimate target for the VIX is up here above this $39 level. That could take a while to play out. But as of right now, the VIX is finally getting its bounce and heading higher. Look at a weekly chart of the VIX. See how it got its perfect bounce right off of that 50-day moving average, and now it's starting to head higher. So we could see this sustainable move higher in the VIX over the coming weeks. So that's something to pay close attention to. Now, let me draw your attention to the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And as I've been pointing out, we have been in this downward trending slope since April of 2021, and it has not changed. So the overall momentum or the breadth of the market is still negative, still bearish. And we are now heading back down towards that 20 percentile level. So again, the higher you are on the scope, the better it is for a bullish market. The lower you are on the scope is the more likelihood we'll see continued downward pressure on the market. Right now, there's only today closed that with just 23%, a little bit less than 24% of S&P 500 companies still above their 200-day moving average. That means at least about 66%. Okay, it leaves about take that back. Leaves about 76% of the S&P 500 companies are below their 200-day moving average. Sorry about that. We look at a daily chart of this tool. We could possibly see a bounce in overall market next week because this is a perfect little gap here, gap down right to the trend line of the lower portion of this range. So I would not be surprised to see some sort of small bounce in the market next week, maybe even try an attempt to fill this gap. So we get a bounce here, we'll also probably more likely get a bounce in the regular market. So we have to see what happens next week. Whatever bounce we get, I think it'll be muted by the end of the week next week because we have taken a new leg down when I show you the longer term daily and weekly charts. Now let's take a look at all right, here is the tool that tracks the new highs and new lows of the New York Stock Exchange and the NASDAQ. Again, if you come to my Twitter page, beginning of my Twitter page, I have this pinned, a link to that tool pinned right to the front of my Twitter page, as you can see here. And once you click on that link, you'll come to this page. And right here shows you that this last reading was at 4 p.m. on June the 10th. And as of that last reading, let's go to the New York Stock Exchange first. New York Stock Exchange shows only 4 new highs created, and look how many new lows created, 253 new lows. All right, so that just lets you know that the bears are in full control. We have That's a big difference between new highs and new lows. New lows are in full control, which means the bears are in full control of this market right now. Here's the NASDAQ, 25 new highs created. Scroll halfway down and see how many new lows. 477 new lows created. So the overall breadth of the market is still negative, still bearish. Okay. Let's go straight to the indexes. Let's take a look at the S&P. Again, you'll see that gap down in S&P. There's an open gap here. So a lot of times after we have such a big move to the downside and it creates an open gap, there's a lot of times when that open gap can be filled. So we got to pay attention to see what happens next week. So we could possibly get a bounce in another week in an attempt to fill that gap. But I think ultimately, if we do get that bounce, that rally come Wednesday when the Fed speaks, I think we're going to come right back down and challenge this level of support. So that's something to pay close attention to next week. If we take a look at a longer term monthly chart of the S&P, what I did here, folks, is drew a Fibonacci tool from the lows of 2009 up to the highs of 22, sorry. Just to get a general idea of this the magnitude of the overall longer term move we're seeing in the S&P. And as you can see, it looks like we are definitely in a serious downtrend this year and possibly heading back down to, first of all, test this breakout or test this high, should I say not breakout, but test this high right here when we had the high of the COVID plunge or the 2020 plunge. Then we hit that level and we came right down. Looks like we are heading to possibly test this level. That is a huge possibility that we can see price action continue to break down. Right now, could get a little bounce here, but eventually I think the price action will break down below this 23.6% Fibonacci retracement level and challenge the 50-day moving average as a level of support. And if that doesn't hold, I think eventually we'll end up way down here sometime over the next couple of months or so. So that is a longer term look at the S&P. Now let's switch back to our daily chart. So in the near term, again, there's a gap here, but I do think one or two things can happen. We can come and fill this gap right away, or we can march down to this 23.6% Fibonacci retracement area and get a bounce and may attempt to fill that gap. So we got to see how that plans out. But ultimately, I think by the end of next week, we're probably going to see lower prices. But in the beginning of the week, we could see a little bounce. There's a gap right there. And 9 times out of 10, gaps find a way to fill before they continue to move in the direction they was going. So that's something to keep an eye on. But I think by the end of the next week, we could possibly see lower prices again and possibly challenging this level of support. All right, let's take a look at the Dow Jones. Same case on the Dow Jones. Here is a daily chart of the Dow. Again, we see that gap down. See the gap down in price action with a long red candle. And if I was to switch this to a sorry about that, folks. If I was to switch this to a 4-hour chart, you will see that we are touching the oversold territory, but we are not completely oversold yet. So we can see could possibly see a little bounce, but I think ultimately price action right in the next week is probably going to end up lower again, much lower possibly. That is the Dow Jones. A look at the Dow Jones, and if you look at the Dow Jones weekly chart, you'll see the same type of scenario. And even on the Dow Jones weekly chart, it's just starting to see, we're just starting to see the 20-day drop below the 50-day. Strong bearish signal. And with that long bearish candle that we ended up with this week, by the end of this week, I do think we're going to see lower prices. Oops, didn't mean to do that. Not mean to do that, folks. Sorry, my dog is a little happy in the background. All right, now let's switch to the, so we looked at the Dow and the S&P. Let's go switch and take a look at the NASDAQ. Same type of scenario. Folks, the bears are in full control of this market. Just to let you guys know, all these rallies have been sold off. So now here's a weekly chart of the NASDAQ. Tried to make back up to this level of resistance, didn't quite make it, and we got a big time rejection right back down to a level of support right at the 50% Fibonacci retracement level. So could we see a small bounce next week? That we could. But I think ultimately by the end of next week, I think we're going to end up seeing lower prices. All right, here's a daily chart of the NASDAQ. Again, you see that little gap. So we could see a possible rally, or we could continue to see lower prices right off the bat. But there's a chance that we could possibly try to fill that gap. I think ultimately by the end of next week, we still could see much lower prices. All right, last index to look at is the Russell 2000. Russell 2000 is still also a little small gap. We could possibly fill that gap, or we could just continue straight down to a level of support. All right, folks. Let's see. You know what? So we went over all the major indexes. Showed you a longer term aspect. Here's the longer term aspect of the Russell, and a definite downtrend. You can see price action is stuck below the major moving averages on the weekly chart, and we're heading lower in general. So it's just going to be a rough year for the raw markets, and I don't see us coming out of this bear market anytime soon. I think all rallies will continue to be so. There's Fed speak next week on Wednesday, so anything is possible. We could rally in the beginning of the week and then sell off, or vice versa. But ultimately, I think by the end of next week, I think we're going to end up seeing lower prices. But expect a lot of volatility next week, folks. All right. And let's take a look at one last thing, and that is crude oil. Again, folks, these inflation numbers are off the chain, which means a lot of goods and services for consumers are just ramping up. It's becoming much more expensive. I don't think this inflation scenario is over yet. I know last month there were a lot of economists saying, hey, they think the inflation has peaked. Well, they got a shock today. Inflation seemed to not peak, have not peaked. So nobody really knows. But ultimately, if you look at the overall markets, look at the long-term trends, the monthly chart shows that we are in a bearish market that could be seeing much more downward pressure over the next year or so. But look at crude again. You see this rounding formation, almost like a cup and handle fat pattern forming. Looks like we ultimately want to challenge that 129. I still believe that. In the near term, we got a little pullback here, along with the overall markets. But I think eventually, can't put a time frame on this, but I think eventually we're going to end up challenging that 129 level. So overall, crude is still, even with today's pullback, it's still in an uptrend. Here's a daily chart. A couple red days so this week, but no big washout like the major indices. All right, folks, that's all I have to offer. Again, be vigilant. There's ways to take advantage of a downward trending market. You can make money in this market to the downside, so keep that in mind. And I will try to be with you guys on Monday. Try to start today off with a opening market review if possible. If not, I'll catch you guys sometime during the week. Till next time, Tim Davis here signing off. See ya.